Welcome to Know Your Facts. And today, Ali Nasir, I am the host with Mr. Shan Saeed, international economist from KL, Malaysia. And today I'll be talking about gold with him because I have some really interesting news that I've read, and I'm not really clear as to how to decipher it. So I have requested Mr. Shan Said to join me and particularly to explain to me and not only decipher but explain the details of this piece that has appeared online and is being shared so much that it's become viral. So first, I'd like to welcome you, Shan.
Thank you, Ali Nasir. Good to be back on your show, and I'm having my green tea at this point of time. So, uh, thank you,
I
Ali.
would like to start. I would like to start by telling you that Goldman Sachs has, um, it's something related to Goldman Sachs, and the Goldman Sachs survey shows many investors think that the precious metal will hit a new all-time high of around $5,000 by the end of 2026. And we've already seen that gold prices have rallied around 58.6% year to date and broke through the landmark $4,000 level for the first time on October the 8th. So, really speaking, October has been a good month for us, and of course, some November as well. Birthday months for both the host and the guest. But I guess this survey has actually stirred a lot of interest in gold, and I'd like you to talk. I'd like you to talk in detail about this.
Yes, Ali, we are saying the way the gold is moving up, it has touched vertiginous levels this year. As you rightly pointed out, gold is up 58% YTD, and this is the third bull run, Ali, uh, in the gold market. The first bull run started from 1971 to 1980, when gold started at $35 per ounce, and it hit $850, $850 per ounce on 20th January 1980. So if you do simple math, it's 2,328% increase in a span of 9 years. And the second bull run started in 1999 when gold was at $257 per ounce. And on 6 September 2011, gold touched 1,923 dollar per ounce. Again, 650% increase in a span of 12 years. And the third bull run has started from 2015. On 16 December 2015, gold was trading at $1,050 per ounce. And now, after 10 years, gold is touching $4,200 per ounce and even more. And I shared in your last program last week that I wouldn't be surprised. I've already made a market call, gold touching $10,000 per ounce by 2030. And with regards to this report of Goldman Sachs, uh, gold touching $5,000 per ounce by next year, it looks very pragmatic, it looks very realistic, and it is very relevant to the market. So, overall, the sentiments of all the global banks, whether we are talking about Goldman Sachs, whether we are talking about UBS, Bank of America, JP Morgan, Citibank, more or less all the global banks are saying the same thing, that gold is going to uh, will be on the upsurge. So all these asset classes are leading to one factor, and that is tangible assets are back into the market. And when I talk about tangible assets, I'm talking about real estate, I'm talking about gold, silver, agriculture, I'm talking about luxury goods, arts. So I think gold will continue to be on the upsurge. I wouldn't be surprised because the upcoming meeting is happening next week for Fed on 9th and 10th of December. And it's very much on the cards that we shared on 9th April that Fed will be cutting two to three, there will be two to three cuts for this year. Fed has already made two cuts, and the third cut is coming because US economy is slowing down. Once the Fed cuts rate, you will see dollar index is already on the depreciating mode. So once the dollar depreciates further, it will give really a major boost to the US dollar. So I wouldn't be surprised in one of the programs on 365 News I shared with Mashal. You know her very well. She's a common friend. That I wouldn't be surprised that gold hitting between 4,500 to $5,000 per ounce by December of 2025. Gold is already hovering over $4,210 per ounce. So let's see what happens next week. It will be a very important week. It will give further forward guidance to all those sophisticated and smart investors who have taken long-term position in tangible assets. And I am bullish on gold. I'm bullish on silver. Look at silver. Silver is up more than 95% year to date. Silver has been under the shadow. It is called the poor man's gold, but silver will shine further, and gold will, the yellow metal will shine further as well.
That's a very interesting, bold observation, and you have been making it not from today, but I think you have been pretty bullish on gold for quite some time. Of course, my level of confidence on gold has been because I have believed that it's been an asset for, maybe generations, centuries, millennia. And I
Yes,
think that it has not lost its value since then because mankind has somehow established its affinity towards gold and has somehow realized its utility through the years, not only being a precious metal, but of course, many of us may be aware, and some of us might not be, that it is somewhat of an industrial metal because it has such attributes and specs that makes it very useful for certain things. So its demand has not gone down through the years. In fact, it's still sought after, and I have seen many analysts who have been very confident about value retention when a certain amount is invested into gold. However, it is important to discuss here as well what may be the macroeconomic signals behind it as well. Because you see, you've mentioned some of them, but I think there are more underlying macroeconomic indicators and numbers that you would like to discuss here.
the biggest factor for gold upsurge is the central bank buying. So when central banks they come into the picture, we are not talking about $100 million. We are not talking about $200 million. We are talking in billions. Look at Turkey. Look at Poland, Japan, India, China. These central banks have been buying gold since 2022. And once the central banks enter into the market, it's a clear signal that they are losing confidence in US dollar and they have more confidence in gold. You'll be surprised to know that central banks have got more dollar as compared to US Treasury. As you know, China has offloaded her US Treasury from 1.2 trillion to now they have gone down to $700 billion. And likely I think Japanese central Bank of Japan is doing the same. They're offloading the US Treasury and they are taking long term position in gold. So the biggest factor that is contributing to the rise of gold is central bank buying. So once the central banks enter into the gold market, then you can expect vertiginous levels of gold. So that's why I'm very confident for next year. Gold will be trading between 5,200 dollars to $600,000 per ounce by 2026. I've already made this market call and I've already shared with press and media. 5,200, uh, 5,200 to $6,000 per ounce by 2026.
You're even more bullish than the consumer survey or the survey of sorts by Goldman Sachs. So it kind of puts us in a more difficult position while justifying to some of the people who have been investing in other asset classes, and most of all have been rejecting and denying our perspectives for quite some time. However, you would see that we've seen a bit of hammering to Bitcoin investors. who entered the market when it was fairly high, and then we saw after that surge there was a crash, and subsequently I think it's stabilized. I really don't know because I'm not focusing on Bitcoin right now. I think the whole world is looking towards gold at the moment. Second is I'm not really sure about what would be the impact of international capital market behavior on gold. I think you'd be able to explain it better because the movement of capital markets, equity markets, both home and abroad, have been pretty, pretty erratic. So I want you to talk about that as well.
Yes, I think you have. I'm glad that you brought this up. Equity markets will stay volatile, but once the US dollar starts depreciating, I expect the US equity markets to be rising again. The biggest investor right now in the US equity markets are the foreign investors because they see a lot of upside to the US equity markets. So I expect the equity markets to rebound, but yes, there will be a lot of hiccups. As you rightly pointed out, they have been erratic, they have been volatile. So those investors who are taking long-term position in equity markets, they have to be very careful. They have to understand the valuation. They have to understand where the company is heading, the customers, where is the industry, where is the consumer cycle, where is the industry cycle, where is the company heading towards in terms of their cash flows, in terms of their expansionary phase. So overall, nobody knows where the equity markets are heading, but it looks very volatile for the next 1 to 2 quarters.
That's a very balanced observation. And Shan, as we come to the conclusion of this show, I personally felt that it's nice to highlight this right now. It's good to highlight it right now that this is not investment advice. This is basically a commentary on our understanding, our opinions, and our views.
Yes.
Investments in all kinds of markets and assets is subject to risk. So, anyone who wishes to invest on the basis of the comments and views, please remember that we take no liability for your investment decisions. I guess there is.
Absolutely.
I've,
Absolutely.
I've put it out there as it is. Because you
Yes.
see, I never thought of this disclaimer because since I've seen that you write a lot of articles and you're very well published. I've seen your articles in magazines and newspapers, and I usually see that you give this disclaimer. So I thought we should even say it in the program as well.
Yes, this is just a commentary, as you rightly pointed
Hmm.
out, a market commentary. We share our observation, we share our expertise, but it's in no manner a sort of investment advisory for anyone. And people who are watching our YouTube should remember that they should execute their own due diligence,
Yeah.
and we take no liability for any of the investment that they
Because they
undertake.
always say DYOR, right? Do your
Yes,
own research. And we
you.
always encourage that. In fact, we look forward to your feedback on YouTube as well, because
Yes,
since we've undertaken this relatively difficult mission upon our shoulders, that we are doing this show for our international audiences, which is very unique for a country like Pakistan. It's not the number of viewers that matter, but most importantly, the influence that the number of viewers exert. And I think that since we've got these comments on our YouTube video and comments on our WhatsApp regarding the video, I can now realize that very influential people within the financial community are watching the video. So I think many viewers would have to understand that it's not the number of views, but the influence exerted by our viewers on the financial market, or the views that they, or views and opinions that they have, and the opinions that are drawn on those views and opinions that are more important. Of course, Shan is very, very popular throughout the world, and particularly in Malaysia and Pakistan as well. And he just had his birthday, so we'll wish him as well. Happy birthday, Shan. Of course,
Thank
we
you.
won't use the word belated because there's nothing belated, because last week we had a show, and after a gap, we'd have a show today. So I hope you have the cake and candles ready for our viewers. Or maybe we could have some cake next time. Really nice
Definitely.
talking to you, Shan. It was
Thank you.
wonderful. I usually try to keep the program very compact so that we finish off or wind it up in about 15 minutes. And I think we've reached our target. Thanks for that. We'll put up an edited version of this on our YouTube channel as well. Thanks, Shan. Thanks once again.
Thank you. Thank you very much. See you next time.
Same here.
हो गया जी खत्म. डन हो गया. अली नासिर नहीं है. ओके आई